Good morning, everybody. I apologize for not being on camera today. Let me share my screen so it's not so weirdly awkward with me not being on camera. So let me share my screen. There you go. Good morning, everybody. If this your first time tuning in to Tim's Tidbits, allow me to give you a nice hearty welcome. If it's not your first time, still want to give you a welcome and thank you. I'm dog tired. Long weekend. Hopefully everybody enjoyed their weekend. It's Monday. The market is open. If you're going to trade, please trade safe. If you're not going to trade, take copious amounts of notes so that you can go back and study what you saw today. Let's get into this overnight price action. Main reason why I tapped in today is because really just wanted to see if anybody had any I'm gonna go over the overnight price action, but I wanted to see if anybody had any maybe questions or anything concerning the mentorship video that I dropped Friday. If you saw the video, put a 1 in the chat if you saw the video, and then if you have any questions in relation to the video, feel free to ask away. And if you're in the Discord, feel free to jump on the Discord and unmute and say, "Hey Tim, I got a question." I see that we've traded back down to the new week opening gap. For those that don't know what the new week opening gap is, I just ICT concept, which basically is drawing emphasis or drawing attention to the just the gap from between Friday's close and Monday's open. It's essentially the same concept of a new day opening gap, meaning the gap between any weekday, but the new week opening gap is just the difference between the close of the last trading week and the open of the new trading week. But it's just, from Friday to Monday instead of from Monday to Tuesday or Tuesday to Wednesday or Wednesday to Thursday. So don't get caught up in the fact that, well, what's a new week opening gap? It's just saying you hear them call it a new day opening gap, new week opening gap. The new week is just going from Friday to Monday. And I see that we've traded back down into it. Let's get into it. This is the 6 o'clock candle. We opened up at 6 p.m. at 53.29.25. All right, that was a, what is that? 1 and a half points, 1.5 point gap up from the close on Friday, the ES close on Friday. We just moved back up to the midnight price. Also, let's stretch this out some. What's out of the way? All right, we opened up and went straight up for the first 15 minutes, creating a huge busy and volume imbalance and liquidity void. So the liquidity void is here, where there's nothing in between these two candles right there. That's the true definition of the liquidity void, not what Michael was teaching in the core content. He already came out before and said he just taught that buy side or sell side imbalance, like a long imbalance, as a liquidity void, because that's what people insisted on calling it. So he just rolled with it. But there's your liquidity void there. There's no price at all in between those two candles, right? And even if you go back and look at my old liquidity void video that I did before Michael even came out and said that, he might have said it already, but I said that I didn't agree with what he was saying as far as the liquidity void, but this is a true liquidity void. And then he's later verified why he did what he did. But moving on. So we got a liquidity void, we got a volume imbalance in between these candles, and we got a huge buy side imbalance, sell side efficiency, aka BISSY, aka bullish fair value gap. We traded back down into that fair value gap on the 630 candle. Then we pushed up into, I think this is a 15-minute SIBI, respect and consequent encroachment of it throughout the night up until in the midnight open was the low of that SIBI at 53.3550. Respect the consequent encroachment. We just consolidated the engineering liquidity, respect and consequent encroachment of that SIBI throughout the night. Then at 2 o'clock, we came down, took out the sell side below that consolidation, trading back into that huge BISSY that we was talking about. And then finally making a low on the 430 candle. Then we proceeded back up and took out the buy side, touched the top of took out the buy side at 7:15. At 8:15, we touched the high of the SIBI, right, and consolidated in the premium of the SIBI for a short time. We consolidated in the discount of the SIBI far longer than we consolidated in the premium. And then that's spam. I don't know what it is, but I know it's spam because it's not saved in my phone. Lumberton, North Carolina. Yeah, that's spam. Okay. Yes, and then we immediately sold off after taking out the buy side and touching the top of the SIBI. Immediately sold off, coming back down to the new week opening gap, looking like right at consequent encroachment. Yes, consequent encroachment of the new week opening gap there. Yes, came down to consequent encroachment of new week opening gap, push back up, creating a SIBI on the 830 candle. Then we pushed down once more, touching this bullish order block from Friday at 4 p.m. Went down roughly, looked like roughly mean threshold of the body itself. Let's check that. Let's check and see if that's mean threshold of the body. Yes, right around mean threshold of the body. And one tick away looked like low of that candle. No, that's actually mean threshold on the dot. Low of the candle is 53.2675. Mean threshold is 53.2675. So we went down to mean threshold of the body to the tick. And then that's on the 930 candle, went to mean threshold of the body, and then immediately took off, repricing the SIBI and touching the midnight open. And that's where we are now for price action. Does anyone have any questions in relations to the mentorship video that I dropped Friday? If not, we're going to keep it short and sweet. If ain't nobody got no questions in relations to the mentorship video. If you do have questions and you're in the Discord and you're sort of shy about asking why I'm live on YouTube, um, I'll stick around for about 5 minutes, 5 or 10 minutes or so. I'll stick around up until like 10 o'clock in the Discord. If anybody got anything, if ain't nobody got nothing, I ain't gonna be in there. But if you got any questions and you're just bashful about asking on the tube, I'll stick around. And is this SMT since YM is dropping and ES move? SMT is divergence. SMT is you look for SMT at significant lows and highs. So at a significant high and low is when you look for the SMT. But when they're just moving in different directions, it's just simply divergence, right? So see how we got divergence here, like the YM is dropping, the ES is pushing up, the NQ is pushing up, right? That's, you know what I'm saying, that's divergence. They're not moving in sync, right? SMT, right? And it's like SMT divergence, but SMT, you want to look for that at like anticipatory reactionary points. Let's just say here, not saying that this is, but we just saying that right here on the ES, where this red candle got right there, we're going to say that that's a daily low. That would be um an anticipatory reactionary point. So we're going to find that same low here. Same, we looking for like the same candle there, right? And then we're going to find that same candle on the NQ, right? So the same candle on NQ right there, right? So now we're saying this is a daily low, right? That candle right there is a daily low on all three, but back here, the low is over here. You see what I'm saying? So let me line it up right. So this is a daily low on all three, right? That was that candle, right? So now our daily low is there, and so when this candle came in contact with it on all three, right? You would look at this. You would look at this right here, how this candle took it there, right? That candle took it there. You would look at that as SMT divergence, because at the time when this candle hit it right here, okay, when this candle hit it right there, see, it's like this right here is like SMT divergence, where at the time here we took it out. Matter of fact, let me do it like this instead, right, to make it make sense. Okay, there you go. So now this, and then we'll put the NQ here. All right, we'll do it like this, so it'll make, so you can visually see what I'm talking about. Okay, so now this right here would be SMT divergence, because we haven't taken the low here, right? And we made a swing. See, we really need a, if we had a swing low here, it can be like a better example, but it'll be a swing low here, a swing low here, and a swing low here, but one of them would have not taken out that sell side, that higher time frame sell side, and that would be a SMT. But yes, this is divergence. And when we have divergence, it lends to high resistance liquidity runs. It lends to chop. until the indices get back into sync. Are you still doing turtle soup videos? I haven't even started doing the turtle soup videos. I haven't even decided if I was gonna do it for real. I know people were saying that they want me to do it, but I when I sit down to trade, when I sit down to actually trade for real, it, I go to what I'm most comfortable with. So that's why I haven't even started trying to record turtle soup videos. It's like I haven't conditioned myself to um actually take that trade yet, because I sit there and I watch for it to set up. But if I'm trading for real, I'm trading, you know what I'm saying? When I'm trading my money and trading, you know what I'm saying, I ain't and trying to take a trade in um the the what's the name of the place, man? My funded futures account. I go to what I'm most comfortable with. And full transparency on that, like that's why I was saying this morning, before I got on, um um with the my funded futures account. I was up this morning looking at the London, and I'm like totally out of sync with the market. And I took two trades on my with my go-to setup, and I took two losses. But it was my I ain't gonna say my go-to setup, but it was like my style of trading. It was, you know, a setup that I get, you know, it wasn't like my bread and butter setup, but it was like a setup that I would normally take based off like fair value gaps and stuff like that. And I took two losses. I don't feel in sync with the market. And I I'm okay with that. Like, and the only way for me to get back in sync with it is to do it. I can sit here and read the price all day long, but it's not going it's not going to get me back in sync until I start pushing the buttons again, because I can lie to myself and say like, oh yeah, I would have taken that trade. You know what I'm saying? You can lie to yourself all day long saying, oh yeah, I would have took that trade and did that, but until you actually push the button, you don't know if you would have took that trade for real. It might be your setup. It may look beautiful, you know, but would you have taken that trade? Would that trade have played out? One time I got into a trade, and I set my limit order, went to the bathroom, came back from the bathroom, and it had tagged me in, went into my favor, and then turned around and was about to stop me out. I'm sitting there like, cheese and rice. And then it stopped me. That was the second trade, and then it stopped me out, and I got up and I went to bed. You know what I'm saying? I got up at, how long am I typically in a trade? I'm in a trade. If I'm in a trade too long, right? If it ain't moving fast enough for me, and when I say moving fast enough for me, if I'm in a trade like over 15 minutes, I start feeling like I'm on the wrong side of the trade. You know what I'm saying? I start, unless it's like a super slow day. If I'm in a trade longer than 15, like if it hit 15 minutes and I'm still in that trade, I'm like, oh man, I'm on the wrong side of this trade. And then, but that's not always the case. So I don't just always cut it. You know what I'm saying? Because the worst feeling in the world is if you cut a trade and in at a loss, and then it does what you expect it to do. You know what I'm saying? Like if you like, I don't believe in just like, I don't believe in just like cutting a trade because I've been in it too long. I'm gonna cut a trade if it's violated um like too many PD arrays. You know what I'm saying? If it's violated too many PD arrays and I know I'm wrong, then I'll cut it for a smaller loss. But if I just feel like, oh, I've been in this trade too long, and then I cut it, that's like me trying to force my will on the market. And then the worst feeling in the world, because you can give yourself a false sense of knowledge if you cut it and then it go against you. Be like, I see, I knew I was right. You know what I'm saying? But then what about when you cut it and it go your way and you sitting there pissed because a you done took a loss, because you was, you know what I'm saying? Like you don't, you're not even trusting the process if you do stuff like that. That's just my opinion. And no disrespect to anybody who do that, but that's just my humble opinion. Why can't I find what I'm looking for? Why can't I find what y'all hold? I'm trying to find what I'm looking for, man. Oh, there it is. This is what I was looking for. Okay. All right. Okay. There you go, right there. This is what I was looking for right there. I don't like showing my account number, so screw y'all if y'all. I'm sorry. If y'all don't like, I don't show my account number. That's what I was talking about. You know what I'm saying? I took 2 losses in the account today, trading the London. And so I was trying to figure out, I couldn't figure out how to not show my other accounts. That's what I was looking for. But yeah, today was the first day I tried to take a trade in this account because I just had a lot going on since I purchased the account, and I took 2 losses off rip. So, you know, but I haven't been looking for turtle soups. And if, you know, if I get to the point where I'm trying to trade it, you know what I'm saying, if I decide I want to start trading it, then I will record it. You know, I will record. Like if I get into it, I can't promise it's gonna be leading up to it. But if I take a trade based off of turtle soup, then I hit record and start recording it and explain what I was thinking getting into it. How about that? We'll do that. Speaking of how about that, that was one of my older brother favorite terms. How about that?
I laughed as soon as I heard that. Good morning, everybody.
You say you laughed as soon as you heard it. Yeah. So yeah, man. I think that's it. I don't see. Yeah, okay. Yeah, how long you been? In fact, 15, 20 minutes. Yeah, it mess with your mental, Tom. It's like when you in there too long, it start messing with your mental state. And that's when y'all hear me talk about preservation of mental capital. Man, it messes with you when you sitting in a trade for too long, especially when it's during a time when you know price should be moving. It messes with you. Stop it, Valentine. You did not hear me say that. You did not hear me say that. Hey man, that's it, man. We gonna call it. If you're in the Discord, pull up in the voice if y'all got something. I know I said I'll stick around to 10, but I'll stick around a little longer because I already took 2 losses today and I ain't taking no more trades. So if y'all want to pull up and just ask me questions or just ask me questions about what I think about price, pull up in the Discord. Everybody else, if you're gonna trade, please trade safe. If you're not gonna trade, please take a copious amounts of notes so you can go back and study what you saw today. And until the next time I decide to get on Algo's internet and share my thoughts on this thing they call price action. Be safe out here in these trading streets. It's your boy Aranya Grande. I'm gone, man. Yep.